Good evening, everyone. Time for another silver update. This is the 1-minute chart of the Euro US dollar cross provided by netdania.com. You can click on the link below. As you can see, we have a little bit of activity going on here that just started at roughly about 8 p.m. Eastern Time. Don't know what the news is, did a brief look around, but didn't really find any. You can see that the silver and gold markets really haven't reacted. They often do jump with the euro, but there really isn't any news out there. So we'll wait and see tomorrow what the news brings. Now the silver chart, let's pull you out to the daily on the silver chart. We're still just kind of trending sideways. We had a pullback from that initial rally that we ran up. You can see we ran up. I was guessing we'd put a bottom in. We came back down and corrected the trend line that was violated from before. Well, this trend line has still not been picked up. The previous trend line that I had was penetrated and then it failed. So we'll have to see where this next trend line goes. Silver's kind of looking like it wants to get weaker here, but it's hard to say. If we go out to the weekly chart, you can see on the MACD that the MACD has done an unprecedented failure to cross over the zero line, which it has done in the past when it's rallied. It's actually turned down and is now trying to turn up again. So if it does turn up and does something like this, this is going to be by far the largest bottom type formation that it's ever formed. If it even goes lower, then I'm assuming that that will even be a longer period of time. You can see the length of some of these periods are pretty long. Some of these are a couple years, and the one in 2008 that we have next was really long as well. So is it possible that this one's going to be the longest one? Yes, it's possible. Do I think it's going to be? No, I don't think it's going to be. But it seems to be forming another one of these patterns, and you can see that the moves are exponential once it breaks out. So an exponential move out of this type of thing would be 75 to 100 or even higher. So we don't know how long it's going to be in this basing formation. I think that the people who say that silver has topped and is now in a bear market are premature. The long term still shows a bull market. Now I want to take you over to the question of the night, and I covered this question a lot and I get this question a lot, but I wanted to repeat my reasons. It's from the J Dizzle. Why numismatic? Hey brother John F, I'm not really sure why you concentrate on the semi-numismatic silver coins. Can you please explain why you would rather pay premiums which could otherwise be used to buy more silver? As you say, the financial world is collapsing. Who will purchase the numismatics from you? Surely stacking more silver is the better play ultimately. Also, wouldn't you agree that there are parallels between fiat printing presses and the mints which make numismatic coins? What's to stop them from making more 2012 dragons? Really want to hear your thoughts on this because I can't understand it. Thanks, love everything you do. Okay, well, there's a number of reasons, and I've covered them before, but the primary ones, first of all, are having strong hands. Now, I covered it before, the ones that I'd purchased, the koalas and the tigers, which maintained their value and went up in price, and that's in a short-term view. So the first view is a short-term view, and the key is to give you stronger hands. Now, the only semi-numismatics that I like to play are ones that are just a couple bucks above what you pay for eagles or maples or the other ones. I like the Perth Mint ones because they're in a single plastic container, which helps them preserve the numismatic value. I've done the math before. In the short term, they actually do return more. That's assuming that you're going to sell them, but you might not. And hopefully you won't, because the whole key is for you to have strong hands in the short term. I think in the long term, if you agree where we're going, it may ultimately not matter, and the person who has stacked more silver for the dollar may end up coming out better in the long run, providing they don't sell and panic. So that's the first point, that I believe they give you stronger hands in the short term. The second point is that if silver is going to go parabolic to some ridiculously high level, you may see a lot of counterfeits coming in. And it's my contention that the rare, semi-numismatic, high-quality silver coins made by the mints are the least likely to be counterfeit. One, because in the case with eagles, but also with maples and the Australian coins, they have a dollar value, or Canadian dollar value or Australian dollar value. There's a value assigned by the government, and counterfeiting those coins is actually counterfeiting the currency. So it has a lot higher penalties than one would find for counterfeiting around. Secondly, they're just going to be a lot harder to counterfeit. They're much more likely to have some kind of fish tester created for them because the popularity, as opposed to some random silver round that you may pick up. So those are a couple of the reasons. There are actually other reasons that I prefer the semi-numismatic coins, but those are the two primary reasons: short-term strong hands, and then long-term uncounterfeitability. So that's just a personal preference. I don't insist that everybody agree with me on that, but I have had a lot of feedback from people who have piggybacked me on some of those, and they've found that those were the case. So let's go over to the story of the night. I really don't have time to delve so far into it as I would like to, but it's just a little bit of investigative journalism on this Stockton bankruptcy, which is hitting the news now, and I just wanted to touch upon some of the key points here. So we've got this announcement that the city of Stockton, California, which is in pretty dire straits according to the news, is getting ready to file bankruptcy. And I just wanted to examine some of the numbers here. So they tell us here that they're expected to file as soon as Thursday. The City Council took additional action to reduce costs, but they could not fill a $26 million budget deficit. So keep that in mind. Now, they were ordered to stop bond payments, and so they stopped paying their creditors, okay, and slashed health and retirement benefits, and adopted a day-to-day survival budget. The painful decisions came after months of negotiations with creditors under AB 506, a new state law that requires mediation before a municipality can file for a reorganization of debt. It was the first use of the legislation, which is designed to forestall municipal bankruptcy. And it goes on, but I really wanted to look at the numbers here because a lot of times when you have these things coming down the pike, you really don't get the true numbers. So I wanted to start off by looking at just a general Wikipedia entry for the city of Stockton. And the first thing that jumps out at you that starts the rabbit trail is you get the, of course, the CAFR. Now, I've covered the CAFR before, and the CAFR is the Consolidated Annual Financial Reports, and there's a gentleman who's done a lot of investigation into this, and it's a very controversial topic. But as you can see here, the statement is pretty clear. According to the city's most recent comprehensive annual financial report, the city reported a significant deficit with US $443 million in revenue and $485 million in expenditures. So you can see there, they're bringing in about 443, they're sending out about 485, and that appears to be a significant deficit. Now, what's interesting is that the report cited $1.9 billion in total assets and $679 million in total liabilities, with $200 million in cash. So if we add our cash to our assets, we get about $2.1 billion in assets and about $700 million in liabilities. Now, the first question one would ask is, if you're getting ready to file bankruptcy, wouldn't you want to liquidate your debt? If you had the ability to liquidate these debts completely, which they do, they could pay this debt off completely and still have $1.1 billion in assets. Now, that $1.1 billion in assets could pay 20 years of this difference, and we don't get any information about that. And so that's very strange. In fact, these bankruptcy proceedings and secret negotiations with the creditors are all very shady to start with, but it gets worse as we dig deeper into the CAFR. Now, you can get the CAFR, you can download it. It's stockton.gov. This is actually about you can see this is a 273-page document that actually, this is a 2010 CAFR, which is, you can see it's June 30th is the end of the fiscal year. I don't know why we don't have the 2011 CAFR, which is a little bit strange considering that it's almost a year later, but we don't have that. But if we delve into the 2010 CAFR, we can see that under this category of investments by category, you can see the investments right here. Just the paper investments that the city holds amount to $468 million. You can see they have almost $100 million in U.S. agencies, 32 in treasuries, 33 million in medium-term notes. We have medium-term FDIC notes, LAIF, that's a state, California state. They got 72 million in mutual money market mutual funds, and they've got repos, GICs, and so they've got almost $500 million in liquid cash investments. Now, you tell me how they're bankrupt. I can't figure it out. Now, when we dig deeper into this, what is really startling is we come to an increase this year of roughly $178 million in debt, and we find out that that debt is related to the construction of the city's largest capital improvement project, the Delta Water Supply Project. This is a $200 million investment in the city's water infrastructure, and it's going to provide a high-quality water supply for the Stockton metro area. This project includes intake, pump station, etc., and it's a gigantic project. So let's look at this project here, and this is actually, we want to watch a little bit of the video here of the city of Stockton telling us why this is so important.
In fact, before you're able to take a sip, our water will be among the cleanest and purest drinking water in California.
This is a great project. It's a well, Stockton's first water right, and it's the first water right issued from the Delta in many, many years, dozens of years. This project will assure Stockton's future. We're building state-of-the-art facilities that will incorporate all of the latest technologies in water treatment. There's attention on this project from all over the country.
Of course, like everything else, there's a price to keeping pace with our future water needs. City staff are currently working to develop the best economical approach to this project. As our city continues to grow and prosper, securing our water rights is vital to our future.
The Delta Water Project, from our standpoint, means supporting the economic development of our community. It's a reliable, sustainable source of water, And given that we have an agricultural-based economy, it supports the ag base, it supports the residents from a livable standpoint, and it supports the recreation that we all enjoy, whether it's in lakes, whether it's in the Delta, and so it's a live, work, play opportunity.
Okay, so we've got this wonderful infrastructural investment in the city of Stockton, 1/5 of $1 billion. So let's go back to our Wikipedia article, and we actually get under the economy a breakdown of the employers in the city of Stockton. Now this is from the 2009 CAFR, and by the way, if you click on the link, it takes you to footnote 21, which goes to the city of Stockton, which goes to a dead end. So so much for Wikipedia's editors staying up on things. But if we look at the employment in the city of Stockton, which is reported to be nearly 20%, Stockton's unemployment rate is the highest in the nation at 18.4%. Now, here's our employers, top 10 employers. So we've got San Joaquin County, so there's your county government. We've got Stockton Unified School District, there's your schools. We've got St. Joe's Medical Center, this is probably mostly government money that's funding this. OG Packing, now you go and look into that, that's one of your first agricultural ones, and there's 2 of those. That's a cherry operation. And then we've got the Division of Juvenile Justice, so that's a juvenile prison. Then we've got Diamond Foods, that's actually nuts, and if you pull up their stock chart, you'll see they're down 95%, nearing bankruptcy. Then we've got the city of Stockton here with nearly 1,500 employees. We've got another hospital, we've got another youth prison, and then we've got a university. So there's your top employers in the city that just spent $200 million on its water boondoggle, I'll say, to secure its future growth. So there's an example of all the types of shady business that goes on with these governments and their cross liabilities and cross investments. It's absolutely fascinating that the city of Stockton, rather than dumping its treasuries and dumping its agency debt and dumping all of these bonds and debt obligations, and could quite easily make itself whole and then move forward, do some cuts, and then operate in the black. Instead, they're having secret debt negotiations, and of course this is part and parcel of the way these things operate on the national level, the international level, even down here on the city level. Everything's behind closed doors, everything's shady, nobody wants to come clean, and nobody's willing to liquidate the bad debts. In this case, there's actually liquidate the positive assets and just come up with a clean bill of health. It's a lot easier to just keep the boondoggles going and continue to have these gigantic projects which aren't even helping a city that's supposedly supposed to be growing based on the project, but we can see is shrinking and really doesn't have any jobs, and is just going downhill rapidly. So that's a perfect example of the dishonesty and disingenuous nature of all these finances. Ultimately, I think Meredith Whitney is going to be proven correct that all these ones are going to go bust, but they would rather actually go bust prematurely than come clean on all the shady finances. So back to the silver chart. Of course, that's the reason why you invest in silver, whether or not you expect a hyperinflationary blowout or you expect some kind of deflationary crash. This is one of very few assets that is not somebody else's debt obligation, and whether or not they're going to default when they really could pay their bills, or whether they really do go bust and just create a giant black hole, you're not going to be on the other end of that operation. And we'll talk to you next time.